All right, what's going on, everybody? So I have my top hard money lender on the video line with me, the Zoom camera, John Eubank with Commercial Lending LLC. So in this video, we are going to talk about everything you need to know about hard money lending. So he's going to tell us a little bit about how he got into the business, kind of what his services provide for real estate investors, and a bunch of other questions that we have written down. So, John, why don't you just kind of tell us a little bit about yourself, how you got into the business, what you guys have been up to, and we'll just go from there.
Yeah, so we started. We've been doing real estate lending here. The company has Commercial Lending LLC for about 17 years now. Started, pretty small, as kind of most small boutique firms would. Started doing just kind of fix and flip loans on a small basis with a small portfolio to a few investors locally. And over the past 17 years, it's really grown. We've been able to, I think, build a pretty good reputation for ourselves, specifically as a local lender, being in the DC metro area. And that's helped us kind of grow our foothold in this market. And then also our reputation has helped, allow us to bring in more capital, grow the business, and to do more lending around the area. So we've, especially over the past, most recent 10 years is really where the growth's come from, and allowed us to not only expand again with a bigger portfolio, but in more geographical, different locations as well.
Okay, nice. And so it sounds like most of your growth has probably been through referrals and things like that.
Yeah, it has. You don't need to do too much advertising, especially in the real estate market, right? A lot of people talk and see, a good lender essentially will travel fast.
Yeah, definitely. Okay, so for the hard money lending, so you do obviously the DC area, because we've worked together for several years now.
Yeah.
I think you helped me buy my first rehab, and then we have a project going on right now. We have some other projects in the works. But you also, don't you do Virginia Beach? I mean, you go a little bit further beyond just DC region, right?
We do. Well, we go, all the way up through Maryland, start out, and we go, obviously our backyard is really a DC metro area, but we do a lot of lending still in Richmond. We do a lot of Fredericksburg, and we have doing a lot of business, especially again past 10 years in the Tidewater region, Virginia Beach, Norfolk, and we also recently started doing some lending in South Carolina as well.
Interesting.
That's been a new market for us.
So I guess evaluating deals a couple of states away is probably, the same as if it was in your own backyard, right? I mean, do you actually have to send people down to look at the properties, or how does that work? You just look at pictures and look at the comps?
Right. So we have a physical presence there in the South Carolina market. So that's kind of where it had started. They allow us to kind of get in and make sure that we're developing the right numbers when it comes to comps and how to assess, our loan to where we need to be on specific projects. So I don't think for us, considering we're very close to all the deals that we do as a private kind of portfolio lender. For us, we've always kind of prided ourselves on knowing everything about the project and everything about the loans that we do on a really personal level. So we felt it was always necessary to have somebody there in person.
Yeah. Okay. That makes sense. So if you're a new real estate investor and you're looking to get a hard money loan, what are some of the things that, we need to provide you with so that you can say, okay, we're good to lend on this property?
Well, we want to see first and foremost that you've just done a lot of good due diligence on the property. And you've kind of assessed and shook out all the risk in the deal. We also want to make sure that you've accounted for every single number. I'm not looking for construction financing numbers down to the nail, but we want to make sure that you've kind of looked over the property and, done something a bit more thorough than just kind of thumb in the wind type of analysis. So, I would say, the best thing to do as an investor is to really Really drill down on your numbers, know your construction costs, and know the in and out of the deal from inception to when you purchase the property all the way to out sale, and all your factors of cost and time that are going to be involved.
Okay, got it. Yeah, that makes sense. And then I guess most of the investors you work with, have they done deals with you before? Are they new investors? Is it kind of like a mixture, or how does that work?
We do a lot of business with new investors, but I would say primarily, 98% of our business is repeat. And that's what we really like. I mean, we have a lot of great borrowers that we deal with, who are, I think, just absolute experts at what they do. And a successful borrower, we're going to make sure that all of our borrowers are successful in deals, and I feel like that's maybe a kind of positive feedback loop for us, because we're getting a lot of repeat borrowers and customers because we're ensuring that their deals are profitable.
Yeah, yeah.
We're almost a second set of eyes, and we want to absolutely ensure that not only are we protected and safe in a deal, but their investment as well is protected and safe, and they're going to make a good enough return.
Right, and I think because a lot of people ask me, they're like, why would you use a hard money lender? They're more expensive than, let's say private money or a traditional bank. But I always tell like a lot of people that I'm working with, it's like, I mean, number one, like you said, they're going to look at the deal and they're going to tell you whether it's a good deal or not. Because if you're a new investor, sometimes you don't know what a good deal is or what a good deal isn't. So part of your role is making sure that investors don't get into bad deals.
Correct.
And also, I guess a lot of the properties that you guys lend on, a traditional bank, while it might be a lesser interest rate, they're probably not going to be able to lend on it just based on the condition of the property.
Right. And there's also other factors. The banks are going to obviously want to see that you have a certain level of relative experience in that specific field, 2 years of certain types of tax returns and such. So we're not going to go that deep into it. We're very project level oriented on these deals. So, that project has to make sense. And if it makes sense, then, we're going to lend on it. So, I think we're very rational when it comes to, our loan amount, our loan structure, and how we approve deals.
Yeah. And yeah, I mean, something that's good about, because there's national hard money lenders and there's also local hard money lenders. So, I mean, one thing I like about working with you guys is it's like, yeah, I'm talking to you like pretty much the direct lender, and you guys are pretty flexible and really know the neighborhoods. And if there's a good deal on the table, you're going to find a way to make it work. Whereas maybe a national lender or national bank, they might not have the same type of flexibility that more of like a local hard money expert might have, essentially.
Right. So yeah, I mean, the perfect example is, if you and I look at a property in DC, we agree on a certain area, a certain neighborhood that's up and coming and trending. And we think, that there's, the certain values in that neighborhood, we can both see eye to eye on. You might not always get that with, a bank or a national hard money or private lender.
Yeah, definitely. So as far as the types of deals that you guys do, I mean, obviously you do single family houses, townhouses.
Mm-hmm.
We did a condo deal, I think a little while, maybe a couple of years ago. Do you guys do like new development type stuff? Do you do new construction, like larger scale projects, and more of just like the fix and flip type stuff?
Sure. Yeah, we do. As of late, I would say the past 5 years, we've done a lot more ground up new construction, infill development kind of jobs. Also recently, we do always consider condo conversions and deals like that in DC. And that's kind of where we've seen the real estate market go, over the past, maybe 5 years as well, because there's not as many paint and carpet deals out there much anymore. Right. A lot of them are now larger value add plays where you're going to have to do additions. You're going to have to increase, square footage and able to get in order to get your margin on a deal.
Gotcha. And just out of curiosity, because I'm sure you get a lot of people sending you deals. I mean, do you have a like rough percent of what types of deals you would accept? Like, out of all the deals that people send you, I mean, obviously it has to, you pretty much work off the MAO, the 70% formula, right?
I would say, um, I mean, first and foremost, 100% of the deals that make sense we'll do, right?
Yeah, yeah.
But as far as say, how many come across our desk that we review and approve, I would say roughly about 70%.
Okay. Oh, wow. Okay. That's a good amount higher than I expected. Because I didn't know I know some hard money lenders, they might get a lot of tire kickers or people that don't really evaluate the deal. I mean, like if you're a new real estate investor and you're watching this, before you send it to a hard money lender like John, make sure you evaluate the deal and don't just send them some random deal that's on the MLS that you spent 5 minutes evaluating.
Right.
I know personally, people send me deals all the time that they want me to look at and evaluate, and I can just tell they didn't really spend too much time evaluating it.
Yeah.
I mean, a good deal for me from a real estate investor perspective is the 70% formula. Which, if you're watching this and you're not sure what the 70% formula, it's you take the after renovated value times 0.7, and then you subtract for the cost of repairs, and that's pretty much the most you can offer on a property. Now, like John was saying, there's lots of deals that can make sense. So if you find a deal at that value, it's probably like one of the best deals out there right now. But that's what I look for when I'm evaluating deals.
Yeah, and at that number, you should be expected to make around, not anything less than a 10% net profit margin, but it should be around 15 at those numbers when you do that.
Yeah,
that 70% rule. So, I mean, I don't know exactly. I have to run numbers on the amount that we come through, but I think it might also factor into the amount of repeat kind of borrowers we have, and they do a great job of vetting the deals before they bring them to us. So most of them are pretty strong.
Gotcha. So let's say I have a great deal under contract. The seller needs to sell ASAP. How fast can you guys close typically?
Well, it's kind of a factor mainly on how quickly the borrower can get together and do their due diligence. Okay. For this example, let's say that it's all completed. We have the ability to get it in and review it extremely quickly. We don't need an appraisal. We don't waste time since we're our own portfolio, our own fund. We don't have to try and source any funds either. So we can jump right into the deal. Assuming the numbers all look great, we can sometimes have it reviewed and approved within 2 days. And as soon as we're approved, we're ready to close. So we have clear title and everything's lined up. I've had deals turn around extremely fast.
Wow. Yeah, that's interesting. So you can close quickly and pretty much do any type of property that needs any type of work, tear downs, properties that just need carpet and paint, pretty much any deal that makes sense.
Right.
So you're pretty flexible. I've always wondered this. So as a hard money lender, how do you raise the money to lend out for the hard money? I mean, I obviously you have private investors that I'm assuming you just build up over time. Is that
again, going back to kind of we talked about earlier was that since we've been doing this for quite a while, I feel that we've built up a good reputation with our investors and to an extent, it kind of is a good word of mouth thing that our borrowers would have, right? It works on the other end as well. So that money has just been sourced, and we have a great reputation with our investors. Well, on the opposite end.
Yeah, and that's the thing. I mean, once you return the investors' money, they're pretty happy, obviously, about it, and they tend to tell everybody about it. And that's good too. Once you do one deal with a hard money lender, they like you a lot more, and then you start to build more of a relationship. Because sometimes the first deal with the hard money lender, they don't know you, you don't know them, so you want to make sure you bring them a really good deal for your first deal, get the relationship off to a good start, and then kind of go from there.
Exactly. And since we're a private fund, we can, we're going to be with the borrower from when we start the loan all the way through until it's paid off. And in some cases, we're already working another deal together alongside that. Yeah. So, we're really a relationship lender through and through.
Gotcha. Okay. And I had some more questions for you. Let me see. Okay. So I think we briefly touched on this. So, I mean, you're more concerned about the deal. If someone has bad credit or maybe they don't have a ton of money to bring to the deal. You always have to, with hard money lending, it really, I mean, you always have to bring some money to the table. You guys always want to see a little bit of skin in the game, right?
Right.
Okay. And usually, I mean, I guess it's on the low amount, it's probably about 10% that you'd have to bring to a deal. I mean, this, if you found like an amazing deal, you always have to bring a little bit, which you can raise yourself. Maybe you talk to some friends or family. You know, I found if it's a good deal, usually you get creative enough to bring money to the table, however you need to do that.
Right.
So you guys will provide the overwhelming majority of the financing, but as far as credit, credit is not the most important factor. It's more about the deal.
Correct. Yeah. I mean, it's going to focus mainly on the quality of the deal is what's going to drive our financing on it. You know, I tend to believe that the amount of cash that you need to close is really kind of an inverse factor of how much profit you're going to make on a deal. It's a good way to look at it, right? You know, if the margin's kind of slim, you know, that might be a deal that you need to bring up more to close. But if you've got a really great buy on the property, again, that's where, as we all know, that's where the profit's made. Then you're going to just need to bring less to the closing table. So I think it's really a factor of how you purchase the property.
Okay, got it. And I think that's true. You know, you make money on the purchase. You always hear that real estate saying, but it's true. Once you get into it, it's like some of these deals you can just relist like 3 or 6 months down the road and make a pretty good profit if you know how to find deals.
Exactly. I mean, it's said a lot, but it's said a lot because it's, you know, it's true. It's a resounding statement.
And just out of curiosity, maybe you know this, maybe you don't. How do most of your investors that you work with actually find their properties? I mean, because with me, it's like a lot of direct mail, right? So I do a lot of direct mail. I get a certain amount of response rate. I do some online marketing, not too much, you know, maybe a little bit of networking, but how do most of your investors find their deals?
So, I mean, that's a great question. You know, I've always looked at that because I've been really intrigued in that as well. You know, how are all these investors who we work with finding their properties? And you'd be really surprised on how diverse the answer is.
Yeah. There's so many ways to find deals.
And it seems to be that most people just have a specialty, the way that they find property. Yeah. And they kind of just dig in and inroot in there. And that's how I find people are most successful. I have people who are, you know, will honestly, they'll do 3 different deals in the same street. Yeah. Right? Because that's how they just door knock. Yeah. They're just integrated into one neighborhood, and that's their sandbox. That's where they like to be. And we have other investors who are all over the state. So it can really vary. You know, I don't know that one's more successful than the other, but I would say the best piece of advice is to kind of find your path on how you're going to source properties and just kind of stick to it because you're going to find efficiencies in that path.
I think once you start doing something that you're kind of interested in, you're focused on it, you just start to see little inefficiencies or efficiencies. Right. And you just start to master that. Yeah. Cause I talk to investors all the time and they're like, oh, direct mail doesn't work. You have to only do networking. And then other people are like the door knocking people, which I honestly, if you can do door knocking, I think that probably is the best strategy because it's so direct. You're face to face with somebody. You can very specifically target exactly the neighborhoods and everything that you want to find. Right. And then other people that only do online marketing. Some people do auctions. There's a niche for everybody really.
Yeah, I agree. It's very diverse.
So couple last questions for you. So what actually, I don't think we ever talked about like, what are your rates? Cause every hard money lender, it seems, has like a different kind of style and way of, you know, interest and things like that. So why don't you talk a little bit about that?
Sure. So since as I described, since we're our own fund, we don't sell any notes off. We don't need to, you know, get liquidity anywhere after we do a transaction. So since we're holding every note that we do from beginning to end, we're able to do kind of creative things that a lot of other lenders, you know, I don't see out there. For one of our popular lending programs are our fixed cost programs. They range from 5% or 10% and go from anywhere from 90 days all the way out to 9 months out to a year as well. Now the 10% fixed cost and 5% fixed cost options. The beauty of them, there are no points and there are no monthly payments. So it's just that amount of a fixed cost amount for the duration that you're getting. And you know, it's been extremely popular for our investors to work with these programs with no points and no monthly payments.
Right.
Because what it's really doing, it's bringing up their capital, right? I mean, it's allowing them to not pay their lender points right off the bat and not to pay their lender monthly payments throughout the duration of the loan. And we looked at it and said, you know, what good does it serve us to be collecting all of the points and monthly payments from our borrower and depleting their working capital, when they could be pushing that into the job, into the deal, and you turning around the property faster, you know, putting it into the working capital budget to get the property through the renovation and get it back on the market. And we thought, you know, that could really speed up the amount of jobs they could do in a year and the amount of deals they could produce in a year. And I think we found that really to be true, and for our borrowers to really enjoy those programs.
Yeah, because most, I mean, I would say probably most hard money lenders, they're more of the, I guess, more of the traditional, you would say, where it's points up front and then a certain interest rate, and then you pay a monthly payment for, you know, 6 months, 9 months, whatever it may be.
Right.
And yeah, that, you know, if you're paying a couple thousand per month for 6 months, I mean, plus you have to, the cost of the rehab, you know, that can certainly add up. So that's one reason why I like working with you guys, because it's
Right.
more flexible. I'm not paying a monthly payment every single month.
Right.
That's pretty cool. And actually, I meant to ask you this. So as far as the price ranges of houses that you guys work with, is it like the full spectrum? I mean, what is like the lowest and the highest price ranges of houses, you would say?
You know, I would say an average low end price range that we have is probably around, you know, 200,000 kind of. And then, you know, we'll lend on properties all the way up that are, you know, new home constructions that are going to be selling for 3 million. You know, it can really depend. So we're obviously open as always. We're open to any deal that makes right.
And how many people are on your team or in your company right now?
So we have 8 people full-time at work. We also have some inspectors as well around the area that work with us. But we keep it pretty small, you know, kind of still boutique. We want to be able to certainly be just one-on-one, a one-on-one basis with our customers.
Gotcha. And do you guys, I mean, for the future, what are you know, what is your plan for like the next 5 years or the next 10 years? Do you have any, I mean, is it to stay as like the go-to local hard money lender, or, I mean, what?
Yeah, I mean, we want to develop, you know, maybe across more geographical areas perhaps, but you know, only ones that are really going to make sense for us. Again, ones that we can have a personal kind of touch in those markets where we have somebody there physically that can, you know, work one-on-one directly with borrowers that are working in that specific neighborhood. So, you know, we're okay to expand. We can, and we probably like to, but we want to do it where it won't affect, you know, anything that we do with a one-on-one customer approach. That we have.
Yeah, keep it more personal as opposed to like the corporate bank with the 1-800 number and like Florida, that, you know, you talk to like 100 different people and then.
Yeah, I mean, and even if you grow, you know, 2x to what we are now, there's always the potential that, you know, you lose the ability to be as responsive as we want to be, to, you know, be able to turn around a deal in a day, right, or 2 days, and if you got too big, that might not be always the case in a way. So it's you know, in this market and, you know, in this business, as I'm sure you're aware, and everybody that's probably watching the video is aware, that it's, you know, these things can happen fast, and so if you don't have somebody that's available to you at that moment, you can lose deals.
And I mean, that's exactly why I like working with you guys. You guys are responsive, and you know, you guys get the deals done. So I don't know if I have any more questions for you. I don't know if there's anything else you want to say, but I mean, if you're watching this video and you're looking for a great hard money lender that works quick, has flexible programs, and like John was saying, just bring them any type of deal. As long as it's a deal, as long as you properly evaluate it, don't just send in junk. They will look at the deal and they'll try to get it done. So definitely check out Commercial Lending LLC. I'm gonna put your contact info at the bottom of this video in the comments section. So if you're looking for a hard money lender, definitely reach out to John and he'll take care of you.
Thanks, Jeff.
All right. I'll talk to you later.
All right. See you, Jeff.
Bye.